All right, welcome to the Explainer. Today, we are diving into something that feels, well, a little contradictory in the financial world. You've got the US stock market hitting incredible new highs, but at the same time, you're hearing all these warning bells about the global economy. So, how can both of those things be happening at once? Let's get into it. So, let's start with the headline that's got everyone's attention. The S&P 500, it's not just doing well, it just smashed its all-time high. I mean, that is a massive signal of confidence coming out of Wall Street. Investors are clearly feeling good and ready to buy. But you gotta ask, right? Is all this optimism really telling the whole story? To figure that out, we need to peel back the layers here, because not everything out there is pointing up and to the right. Okay, so here's our game plan. We're going to start with this market rally, the market's on fire. Then we'll look at the AI engine that's powering so much of it. After that, we'll jump over to see what's up with digital assets, and then check out gold's absolutely wild ride. And finally, we'll take a hard look at the clouds on the horizon. All right, first up, this incredible market optimism. The momentum right now feels almost unstoppable. But what's actually fueling this fire? It really boils down to one word: inflation. We got some new data that was a little bit cooler than expected. And honestly, that was all it took for investors to start betting that the Federal Reserve will finally cut interest rates. And lower rates, that just makes it cheaper for everyone to borrow and invest. And this chart, this gives us a fantastic look at the market's mood. This is the VIX, which a lot of people call the fear index. See that huge drop of over 5%? That's basically fear just evaporating from the market, being replaced by a big surge of confidence. Now, this rally isn't just some vague, happy feeling across the board. Nope. There is a very specific engine pushing this train forward. And that engine is all about technology. This table tells such an interesting story. You see the AI and semiconductor companies, Nvidia, Broadcom, they're just soaring. But it's not universal. Check out the auto sector. Ford had a massive rally, more than 12%. But Tesla, another huge tech name, was kind of left behind. It just goes to show you that investors are being really selective right now. And that really gets to the heart of it. This quote says it all. Even inside this huge tech boom, investors are placing very specific bets. They're looking at companies like Nvidia and Broadcom and saying, those are the clear winners in the AI revolution. Okay, so let's switch gears from stocks over to digital assets. Is that same explosive energy happening over there? Well, the story is a little more complex. And this slide lays out the split in the crypto market perfectly. On one hand, you've got Bitcoin kind of holding steady around $62,000, while investors take some profits. But then there's Ethereum. That's a whole different ballgame. The big money investors, the whales, are buying it up, and analysts think it could be setting up for a major breakout. And hey, it's not just about Bitcoin and Ethereum. The rest of the altcoin market is buzzing with activity. We're seeing big institutions buying in, corporate deals are pushing up prices, and there's a ton of excitement around new projects. It's active, to say the least. Let's pivot one more time from the new world of digital money to one of the oldest investments on the planet, gold. And if you think crypto is volatile, wait till you see what happened to gold in just 1 week. I mean, this timeline is just remarkable. On Monday, with all the uncertainty in the world, investors flocked to gold for safety, pushing it to a record high. But by Friday, the price had plunged over 6%. That is some serious whiplash for investors in just 5 days. So what caused that sudden drop? This chart gives us the breakdown. A big chunk of it, 40%, was just investors cashing in and taking profits. But a stronger US dollar and easing trade tensions also made gold a little less attractive as that go-to safe haven. Okay, we've seen the optimism in stocks, and we've navigated the complex world of crypto and gold. But now we have to look at the other side of the coin, the risks that might be hiding just beneath the surface of this rally. So while the stock market is celebrating, you've got major institutions like the International Monetary Fund raising some serious red flags. They're pointing to slowing global growth, ongoing trade tensions, and the impact of sanctions as major threats to the world economy. And take sanctions, for example. These are financial penalties, right? And they have very real-world consequences. We're seeing it right now with new sanctions on Russian oil firms, which helped push crude oil prices down to just over $61 a barrel. And all of this brings us right back to that central contradiction. The stock market is acting as if all our problems are solved, a perfect landing.
But at the same time, serious economic analysis is warning of storms ahead. So the big question is, which story will end up being the right one? The market's incredible optimism or the world's challenging economic reality?